Today is Tuesday, July 15th, 2025, and I am down 1.4% today on a day where the NASDAQ is basically flat, just slightly down after hours. But for the week, I am up 4.2%. For the month, I am up 31%. Past 3 months, I am up 100%. Year to date, 79, basically 80%. Year over year, 184. And of all time, 344. And if we take a look at my Roth IRA, at one point I do think I was up 10% for the day, and it's mostly from my leverage position in AMD. But this is basically what my IRA looks like. Nothing too special. I did go ahead and buy a little bit of lemonade though, because even though I'm not like fully bullish on lemonade, I do think it's not a terrible stock to start buying right now. So I do have a couple shares in my IRA. Still debating on whether or not I want it in my main portfolio though. And before I forget, I just wanted to go over some of my recent transactions. And I did have a decent amount of activity today and yesterday. And I believe I left off on the July 9th Google buy. But I did also buy some more Pepsi. I did go ahead and sell a covered call on Robinhood, roll out my Nike cash secured put, and then I closed my Robinhood covered call on the same day after making about $190. So even though it was only $190, I decided to just go ahead and take my profit. $190 in one day is pretty decent, and I didn't want to give up 500 shares of Robinhood. So I decided to just take my profit and run. But I did go ahead and buy some more Honest as well. I bought some more REPX. And I did buy a new stock that I've never bought before in this portfolio. And it's actually a REIT. Nothing too exciting. It's basically just a boring real estate investment trust that pays a dividend. And it's part of my broader move of trying to shift a lot more money into like dividend stocks. So I'm still growth heavy, of course, super top heavy with Robinhood being my number one position. But I am also trying to get a little bit more income out of my portfolio. But then later on today, I did also sell one Robinhood covered call expiring December 19th at a strike price of $125 for just a little over $1,000. And speaking of Robinhood, that actually brings me to the main topic I wanted to talk about today, which is, do I think this is the top for Robinhood stock and just the company overall, at least for like the next year or two? And my answer is maybe. They are reporting earnings here shortly. I want to say it's the last day of this month. They're going to be reporting earnings. And there is a possibility that, we have that one last leg up, similar to Palantir, when everybody was thinking, 100, 130 was going to be that top for Palantir. And then I want to say today it actually hit 150. So it had that one leg up just to wash out the shorts, anybody betting against the stock. So do I think that is similar to what is happening in Robinhood stock? Maybe. Obviously, I can't predict the future, but if you take a look at Robinhood's weekly chart on TradingView, you'll notice that it has literally had 9 green candles, which is 9 weeks of just going up with no red. And that is insane. And just to protect myself a little bit, I did go ahead and sell that one covered call expiring at the end of this year for $1,000. So it's not much of a hedge, but it's still a little bit more profit taking that I've already been doing. The $100, $200, $300 here and there that I've been taking off of the covered calls. I've already been taking profit out of the stock, but I did go ahead and sell another covered call today for another $1,000 in premium just to protect myself again a little bit more. Now you're probably asking yourself, well, if Robinhood has been doing so good and they've been constantly innovating and all of Robinhood's competitors are trying to play catch up with them, like what could possibly send the stock down, right? And even though it might look expensive right now, they could always just keep growing into that valuation to justify it. So what is a possibility that I see for Robinhood stock going down, right? Other than like broader macro type stuff. 2026, 2027, the market goes down and it drags Robinhood down with it, of course, being a broker, and the value of Robinhood as a company is heavily dependent on the stock market and crypto market. What else could possibly send the stock down? Well, one of the things that I've been contemplating, and part of this might stem from me being a little bit butthurt about not getting the gold card and being invited to the Hood Summit, whatever. I might be a little bit butthurt from that. No, I'm just kidding. But in all seriousness, if anybody from Robinhood is actually watching this, I would really like the gold card, please. But in all seriousness, next year, they have so many things planned, so many new features and rollouts that I don't really see how they can push all these products out without taking a short-term hit. And one really good example of this right now is the Robinhood concierge service, which is basically special treatment for the high net worth people that are here on Robinhood. And just from what I've been seeing on X, a lot of this is just the people that have been getting the gold cards first, like lots of social media influencers, people that have been going to all the events, people that have a lot of assets already on the app. And that makes sense because those are the people that are making Robinhood money. So, Robinhood wants to treat those people first. But if Robinhood wants to roll out all of these new features like the gold card to a much wider base, right? People that are kind of like me where, I don't have $2,000 in Robinhood anymore. It's more like 200, right? So I'm kind of in like that middle area for them. Maybe I'm wrong. But if Robinhood wants to get the gold card to people like me and people that only have like $1,000, right, $10,000 in their Robinhood account, if Robinhood wants to get the gold card to those people, they're really going to have to start investing heavily, pushing out these cards, and it might cause them to take a short-term dip in their numbers. Because if what I've been seeing on X is accurate, these gold cards are expensive. Doing the whole 3% on everything, 3% match on IRA, all these like promos they've been rolling out, somebody has to pay for that stuff. And speaking of concierge service, the gold card, and all these special features that are as of right now reserved for the high net worth customers of Robinhood, that kind of brings into like a broader topic of, is Robinhood slowly becoming what they rebelled against, right? It's that classic tale of the rebel becoming the establishment, right? No longer being the underdog. And even though this may be way too early to talk about that, because Robinhood as of right now is still, pushing forward with the innovation, they're still the company that everybody's trying to play catch up with. There are some signs that Robinhood is being what they originally rebelled against, right? The old traditional institutions that reserved all of these special features and catering only to high net worth clients. And that is kind of what Robinhood is doing right now. And I'm not saying this is literally the top until the end of time for Robinhood. I mean, Robinhood is pretty much the best brokerage right now. What I am saying is there are some things in the short term that could cause the stock to go down. Another thing that comes to mind is the whole tokenization. There was a little bit of pushback on social media against this whole tokenization thing about how it's not truly equity and there's extra risk associated with trying to buy stocks on the whole token thing, like trying to buy stocks as a token on the blockchain rather than just buying the stocks normally. And Robinhood's 24, the whole overnight market that Robinhood users have access to right now, maybe that is good enough, right? Even though obviously it would be nice to have 24/7 trading, is the risk of buying a token derivative of an asset, is it worth the risk just to be able to trade 24/7? And who knows, maybe that is what causes that short-term downside for Robinhood, right? The pushback against that tokenization, or maybe having it go wrong, at least in the beginning, in the short term, until like that long-term trend kicks up and people really get on that bandwagon and that wave of Robinhood blockchain and being able to trade assets on the Robinhood app, like collectibles, paintings, stocks, crypto, everything, real estate, that is going to take a lot of time, right? And it's going to take a lot of short-term dips and short-term expensive investments to get there. So basically what my plan is, just keep doing what I'm doing. I don't want to cash out of Robinhood, obviously, because I only have 1,500 shares in this portfolio. And even though it is a lot when compared to the rest of my portfolio, I'm not willing to give it up. Even though I have no plans of selling Robinhood, I am still aware that I need to be a little bit more cautious and hedge a little bit more than what I used to. Because if any of you guys have seen my older videos, you'll know that I have a little bit of a problem when it comes to not hedging. But yeah, guys, if any of you actually made it through this whole video, front to back, let me know in the comments and let me know what you guys think about this whole tokenization thing, everything going on with Robinhood. Do you think it's the top for Robinhood stock, at least in the short term? Like, what are your guys' plans for 2026? Do you think, there's some better alternatives right now, maybe like SoFi? Because I did notice that Fidelity recently rolled out their tax slots for mobile. Even though Fidelity always had tax slots on the web version, I did notice that recently they rolled it out for mobile too. So, a lot of competitors are playing catch up to Robinhood. But like I said, if any of you guys actually made it through the whole video, let me know in the comments and just let me know what you guys think.